What's happening, everyone? Welcome back to our channel. Today I'm going to show you a couple of cool things. For those of you that tuned in to last Sunday's YouTube, I pretty much called this gold short that I took the same day and the next day that I told you guys about in the next YouTube. Last video I showed you guys a little bit about the reactivity theory and how I look at where gold is likely to react. What I'm going to do is build off that theory a little bit more and kind of show you how the market rhythm works and how I kind of choose where to close gold, where to enter, and where more often than not it produces reactions. Now, before we get started, go ahead and hit subscribe. You guys can see here on the screen right now, this is the data account I started for gold and US30 on May 28th. You could see the trades on the screen that were taken. And like I said, last YouTube the day before, I think I actually made the YouTube on Saturday or Friday and posted it on Sunday. And I basically told you guys that we're going to be looking for a short there. Anyone that tuned in, I hope you caught it. We sent the trades to our signals group and our VIP analysis group ahead of time. But nonetheless, let's get started here and let's talk about what we have going on. Now, last Sunday, I was showing you guys this stuff, how we pulled ranges and we were just trying to get a feel for where price is reacting. And by the way, we caught over 400 pips on two positions, so you're going to want to stay till the end. This one setup can literally be all you need to trade. It is my favorite setup. I have multiple entry models, but this one is by far my favorite as it's got a high success rate for gold and US30. So you can see here where my reaction's coming from. The reaction is coming from the 618-786. Easy to spot. Now we can see here this next reaction of the next range is coming from the 50 and the 618. What this is telling me right now is the last two ranges rebalanced and they're running efficiently. So what this is going to allow me to do is speculate where price is likely to react. So this reacted between the 50 and the 618. This one reacted from the 618 and the 786. This allows me to pull the third range and understand where the reaction is going to come from. Now, if we look at it, is there anything from the 50 to the 618 that interests us? Or even the 786? We can see here there's really nothing above here. But let's take a look at Asia High. You have an impulse, you have a pullback, you have a break, you also have a daily high. And what else you have here is an order transfer zone. What that means is we're buying. We took out the last set of buyers. This, somewhere in here, the transactions switch from buys to sells. So we know there will be a reaction here. Whether or not the reaction is going to hold and go to TP, that's not for us to decide. That's for the market to decide. What we know is that we can have a reaction there and that we could try to play the reaction. So that is the bearish rhythm we have. Let's change this to black just so it's a little bit easier on the eyes. So that is the theory of the ranges going down. Now, this is something you would have done the night before. You would have this line pulled. I believe on the last YouTube we were talking about how we're going to be shorting from this zone. I might have even already had the line pulled. So this analysis would be done before you even think of the trade. Now, the next thing to consider. We look at reactions, we look at legs, we look at ranges. So, what does this mean? If I look at this first reaction, and I look at the second reaction, what does this tell us? The first reaction had a very deep retracement. It came to, you would say, the 786. So this is our reactional area. Very easy to spot. The next reaction comes from between the 50 and the 618. So what this is telling me is these two legs are running efficient. So this is kind of my reactional area. What else this tells me is where price is going to react. So we talked about this on the last YouTube. This is the first reaction. You can see the first reaction on the first fib came at the 1. Second reaction, we expect at the 2. Third reaction, we expect at the 3. We now have another confluence to sell. Now what I'll do here is I'll look at this second reaction and I'm going to see if any of the two numbers align. All of a sudden we have two fibs that are saying there's a high probability of a reaction here, which also lines up with our bearish fib. So this, you can see how all three fibs align. You can see that we have our liquidity. This is telling us a reaction is very likely here. I'm going to sell from here. So that's the first part of the story. That's how the narrative was built. Actually, before I delete these, I want to show you guys something else. I want you to pay attention to this next leg here. So the high gets broken here. Notice how this leg is efficient, came over 50. This leg is efficient, came over 50. This leg just impulsed up, reacted from the 382, never balanced the 50. What this is telling us is this last push did not meet our rhythm. So usually what happens in this case is I expect a range to be created. So for me now, what I'll be looking for is a rebalance of this whole push. So if all these reactions are coming from 50 and 618, 50 and 618, where are we likely to react here? Probably the same zone that the last reaction comes from. So it doesn't matter the direction. I expect the algorithm to be running the same program until it doesn't. And sometimes there will be the program shift where you do not catch the shift. So this reaction is coming at the 618. Where are we going to look for a reaction? We're going to look for a reaction at the 618. Does anything interest us at this level? We have a liquidity point here. We have a liquidity point here as well, but that's kind of getting closer to the 786, and I don't expect that target to be reached as easily. So now that the narrative is built, the direction is built, and at this point the ranges are just bearish. However, the daily is bullish. We have a scenario where price could do this, or we have a scenario where price could do this. You don't know which yet, but we do know that this reaction we can play. So this was the first entry I took. This was right in Asia. I forget my exact entry area. I believe so. I would have probably entered somewhere around here. I don't know the exact number. It really makes no difference. So we're just going to put a trade here. I don't really care about this stop size. It makes no difference because if I wake up and the move's going in my direction, we're going to look to scale in. By the way, I do hit stop loss on the first scale in attempt and I try again, and I'm going to show you guys why and how. Now, it's also important to understand that now we're measuring reactions going down. So this is my first reaction. Until this goes down and breaks something, I have no idea where the reaction's coming from, but I have to be aware. So let's go to New York, where I wake up and come in. So we have a reaction. You can see this reaction reacted from our liquidity. I measured the reaction. Our first impulse came to the 618. What that means now is there's a possibility for a reaction at the 1.618 and the 2.618. And let's just kind of go on a little further here. Okay, so I'm still asleep here. I'm not at the charts. I come in somewhere in here. I want to say I put an order on this. So this is my stop loss here. So I attempted this one. This one stopped me out, which happens. Gold likes to manipulate. This is what I would call a good loss. So this one stops me out. It also kind of, it didn't really, how do I put this? If we look at it, price is just going sideways, right? And if you break this down, your highs aren't really being violated by any bodies. Now, if you do the actual math here, the first one's a wick sweep. The second one's a body break. Here, you just get a wick sweep. This is still telling me there's selling pressure to the downside. A lot of people would look at this as bullish engulfing and try buying, but we know what this reaction is, and we're willing to sell off of it. So it's just how the market moves. So I take a stop loss there. I don't know exactly where the second entry comes in. Something along these lines. Like, I don't, you guys can see on the phone screenshot I showed you there the exact places I enter. I really don't care if my stop's 30 pips, 40 pips, or 70 pips. What I care about is my direction and my projections. So now, so back to our reactivity theory. Regularly, what we would do is we would pull a fib on this, and we would look at this reaction, and I would even go as far as pulling a fib on this and looking at this reaction, and ultimately I would just see where numbers intersect and where it intersects with the bullish fibs going up. However, here you get a disrespect to the highs, which means I will not pull this reaction, I will not pull this reaction. Rather, we're gonna zoom out a bit, and what we're gonna do is we're gonna pull this whole reaction, and we're gonna pull it right to the low. Now, if you go back to our reactivity theory, check this out. There are patterns that continuously happen. Where did this reaction come from? We have the 618 and 786. So that's just, that's the 1 hour impulse. For those of you that were paying attention, where did this reaction come from? 618 and 786. It's almost like the algorithm is protecting the level, and by this level being respected, you know that this can still go. Based on this theory, was my sell here wrong? I would say no. The reason is, get your direction right. And at the time, had price gone down here and not violated the highs, this fib wouldn't have even existed because you would have just pulled the latest reaction. However, because the highs got run, now I pulled a whole leg because that's not a reaction to me. But now you have all the confirmation in the world that you can safely again enter this. Isn't it pretty neat how it doesn't matter if they're daily, 1 hour, 4 hour, 15 minute. If you know how to read reactions and where you're pulling to, you're going to be able to make some sense of it. Now here's the next part of it. I look for, the whole expansion. I kind of try and find where the numbers intersect. So to me, these numbers intersect. So we already got a reaction at the 618. I expect one at the 168. I expect one at the 268. And if price goes further, I'd expect a 361 expansion. The easier thing for me to do is find where the numbers intersect, which is here. And if you look, we have a liquidity here. So I actually didn't set TP. I had TP a little bit lower. I ended up manually closing these on the bullish reaction. In hindsight, I should have just set TP. But you can see how fast it came. So I think I closed, I don't actually remember. Let me see where I closed. What was it? So we got out, wrong trade, US 30, 73.82. Okay. So I closed on this reaction. 73.82 is where I got out. Part of me was, I think, wanting to be greedy and push a little deeper in here, whereas part of me probably should have set the TP. So all said and done now, we closed here. So you got 185 pips. This one was a loss. And then you have another 230 pips. So we're 410 pips, and then we would have lost, whatever, 36 pips on this. So overall, 400 pips banked, 410 minus the 30 we lost. So about, whatever, 380 pips on the day. But now, if you go back with what I just showed you, and if everything's reacting at the 618, where do you think this reaction comes from? 618. It's almost like the algorithm's running the same program for multiple days in a row. You try to spot this rhythm, you try to ride this rhythm. When the algorithm shifts, you're going to have to shift. So when gold is building liquidity, you're going to get reactions at the 50, at the 618, at the 786, really deep. When gold is trending, it's not going to pull back to the 50. You're going to get reactions at 236. You're going to get reactions at 382. It actually does it here. I'm just going to show you guys. I'm going to show you where the algo changes gears. So, alright, I'm going to clear everything so the chart is cleaner. And we're going to talk about this. So, this is our new bullish range. We have one bullish range now. Now I want you to pay attention here. So this here reacted at the 618, between the 50 and the 618. I looked at this in Asia and I started thinking it could buy. I wanted a little more conviction. I ended up catching this buy here. Little bummed out I didn't take this, but whatever. You're gonna miss a million more trades. So now let's look at the expansion here. So you have price impulses, price pulls back. Where does the reaction come from? So you're still kind of maintaining that rhythm of coming below the 50. Now let's have a look at this. And I want you to pay attention. Notice where this reaction, so when this impulse happens, I still want a reaction from here. So this is the buy I actually took. Even though price expands and never hits my level, I don't take this because it's going to be one of two things. One, the algorithm's going to shift gears and start trending. I can't confirm that until I see a bearish reaction fail and it make two legs. Once I have that, I can confirm that. So this here is just a manipulation to me. I keep this level pulled. I wait for this reaction. I bought this. I ran the high. Same thing I just told you. Now, this is where the algorithm changes programs. So you notice everything's coming below the 50. Next leg, we do not pull back to even the 382. So the 50's never hit. Next leg, once again, the 50's never hit. So I bought this again. This was a reversal zone for me. I sold this, I took a loss. I sold this in Asia, I took a loss. Once this reaction failed and it never came back to the 50 or the 618, I knew there was a chance the algorithm shifted gears. By the time I woke up, price, once again, didn't come to the 50. Now, if we start looking at what's going on, if price is not pulling back, what's price likely to do? It's going to keep buying. There's nothing else to do here. I don't know where exactly we even, let's see, what day is this? The 31st. I want to say in here somewhere. Yeah, I believe we bought this in here somewhere. We closed. This was a scalp. I could have probably held it much longer. I didn't. So I think this was, I want to say this was FOMC day, so we didn't buy there. Hold on. We bought once Powell started talking. So I bought around here somewhere. In hindsight, I kind of played this one wrong. So I kind of looked here, and I ended up basically closing at the first area my fibs intersected. So we can notice there is another area where fibs intersect. And then I would say this would kind of be the next one where the fibs kind of intersect. You could even sometimes you have to just kind of pick the middle ground. So this is telling me there's going to be a reaction here, reaction here, reaction here. I just closed at the first reaction. Now that I'm looking at it, based on the market not pulling back to 50, what I should have expected is the market not to pull back and hold to at least here or here. Anyway, long story short, this was just a scalp, and that's all I caught that day. But yeah, this ended up rocketing. And you could see, if you go back, didn't pull back to the 50. Did not pull back to the 50. You could see kind of how, look at this last leg. So Powell started talking, look at this pullback. So I closed up here. But you can see price never pulled back to the 50. You could have actually bought this based on the rhythm of the last few legs. And then based on the rhythm of the last few legs, you could also anticipate a further expansion than I did. So this leg, your first reaction came from the 027. So I would say the 127 expansion is possible. This is a little bit extreme. The safer close would probably be here. But anyway, nonetheless, you could see how price came here, reacted here, and that's kind of how the reactivity theory works. Anyways, guys, I hope you enjoyed this video, and I will see you in the next one.